Hi there. In this video I will walk you through an NVIDIA position built around the bullish retracement and the potential move back toward the key core wall resistance. My name is Gery and I'm the Chief Options Expert at TanukiTrade. The trade combined a short put with multiple core butterflies targeting the 230 area while keeping downside risk controlled above the HVL. After a strong rally, I bought back the short put for more than 50% of its original value and let the butterflies run. When NVIDIA later lost momentum and broke support, I closed the remaining position. Let's see the recording. NVIDIA is doing a nice retracement to the previous breakout levels here, and I was looking for a setup which makes money if the market goes sideways or if the price goes up to 230 again. So this C2 is my target price for June 18th expiration, which also confluences with the core open interest, and we also have a high net GEX on the upside, so there's a pretty bullishness, and also the volume confirms that the market might bounce from these levels. And here you can see the adaptive expected move, which is calculated based on implied volatility and the time to expiration. And the expected move range is this curve currently. I didn't want to target the previous high. It was too ambitious for me. The C2 level is kind of a nice target if the market decides to go there. We have another absolute GEX here at 220, which might be important and hard to bounce from to the upside, but we will see. And let me show you what I built in Thinkorswim. Here's the structure I built in Thinkorswim. I saw the 210 put for 510, and this is financing the purchase of 3 core butterfly on the upside with 10 strike wide differences, and the target price is 230, which is the C2 right now with the second highest net GEX on the upside. And I wanted to have some time in it, so that's why I was looking for the monthly regular expiration, the June 18, which is not a Friday, because Friday, June 19 is an holiday and the market is not open there. So so that's the thing. And what I need to watch is that if the market breaks below this previous technical resistance, that can act as a support right now. And I wanted to place my short put above the HVL line. That's why I was looking for a 210, just to make it a little bit more safe. So we will see how it goes. And let me show you the fears from my live account. This was the limit price for the short put, and this is the debit for the core butterflies. And the numbers are here. I wanted to size the position in a way that if the market goes sideways in here, I will not lose money at expiration, and I will have a break even on the downside a little bit below 210. So this is the current setup of the position, and I will continue from here. It's the 2nd of June. I opened this position exactly 1 week ago when we were here around this candle. The market broke down a little bit more and then bounced back from it. And right now we can see that we are around the C1 again, which is a higher C1 than previously, because obviously the market went up very intensely in the couple of last days. So I decided to at least get rid of the naked part of the position, and let me show you how it looks like in Thinkorswim. And this was the position before I did the adjustment, and I bought back the short put on the downside, the 210 put, because I sold it for 510 and I could buy it back for 230. So it has already lost more than 50% of its original value. It's a pretty nice theta harvest in a week. So I decided to get rid of the naked part of the position and still holding on to the butterflies. Right now what we can see is that all the short legs are in the money because the market is above 230. It was a quicker move than I anticipated. So I'm waiting to harvest a little more theta because obviously the position has positive theta. And I still have a lot of days until expiration. This is the expiration line in here. And as you can tell, the adaptive expected move range is pretty high. And the detailed volume is mostly dominated on the call side. We have very high call GEX on the upside, so it's a pretty bullish setup right now. If the market shoots up very fast, I would like to scale out from the position, and we will see how it goes. And here you will see the screenshot of my fear from the live trader account. So right now this is almost a riskless position. What I could also do, besides closing the 210 put, is, for example, scaling out just 1/3 of the butterfly, and it would have make it riskless position all in all, because if I did this, both part would have been without any loss. But I thought that this position is pretty quote-unquote safe in terms of high probability range of making money, because if we are zooming out from the risk graph, we can see that the lower break-even is here and the upper break-even is here. So it's a pretty nice, more than $70 or $70 range to make money with it right now, at least on the T+0 line. And if the market stays around this area, then I can still make some money by harvesting theta and the positive theta decay. I'm obviously not shooting for this type of profit in here, but a little bit above 500 would be nice, or around this area, but I'm not even shooting for 1,000. I should stay a lot more into this position to get around 1,000 profit. And NVIDIA is not really a stock that moves sideways for 10 days. Obviously, it happened in the past, but right now this is very intense move on the upside. So we will see how it continues. I will continue from here. It's the 5th of June, and I don't really like what I'm seeing on the daily chart of NVIDIA, because right now we can see that my previous recording contained this kind of candle. The market was really up. Right now the SPX is falling a little bit, and NVIDIA just broke down this previous support and heading to HVR. So I decided to close the position. First I closed only 1/3 of the position, because I was looking at the daily candle if it can break above this line or hold this line and go up, but it couldn't, and I didn't want to risk the remaining profit in the position. So here is what I did. The first one I did for 120, and the rest I sold for $1. So these are the fears from today. So the final profit became $159, and here are the screenshots of my fears. This is a little bit after the opening, and this is right now. This was feared right now. And remember that this position was saved by the naked put side of the position, because if I had not done it, if I had only opened the butterflies, it would be in a losing state. And if I had not closed the naked put previously, it would be in a losing situation as well, because the market just turned down. If I had not closed it, it would be in a losing state, around $245 lost. But since I closed the naked put for 230, and I could get a profit from it because I sold for 510, this was the saving position for the butterflies, because all the butterflies was bought for 147, and I closed all the butterflies in a loss. But this loss was mitigated by the short naked put that was bought back for 230. So all in all, this became a profitable position. It would have been much better if I closed down the whole thing when the market was around here in my previous recording, but that's how the market is working. And right now the market is turning down, because today's NFP report was much better than expected, and this could renew the fear of rising interest rate maybe this year. Who knows? But I had to close the position because I did not want to risk the remaining part of the profit. So I hope you gained some insights from this video in terms of adjustments. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.